This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. US Vice President J.D. Vance is set to lead direct talks with Iran in Pakistan this weekend. That is despite Tehran saying that the ceasefire has been violated. The war weighing on the Fed as minutes show some policymakers warning of a potential rate hike. Risk appetite continuing to rise with stocks getting a boost and the dollar erasing its advance. Plus, we get a sense of the path ahead for the RBNZ. The governor will be joining us in the next hour.
Yeah, we actually saw the Kiwi dollar outperforming after the RBNZ held the rate steady. Of course, there are concerns about inflation risks right now as that Iran war headlines continue to really direct markets. We have seen some outperformance when it comes to Asian currencies, especially with the US dollar wiping out its gains for the year. We have seen that haven premium unwinding on that 2-week ceasefire, but still a lot of questions about what's happening because a lot of countries in the region are still under attack. Still, we saw that positive relief rally continue in the U.S. markets. We had seen some retail flows into Apple as well. Do keep an eye on tech because we had software stocks again underperforming, that AI race continuing. And you can see right now Nikkei futures pointing to some downside after reaching the highest levels in about a month or so, 4 sessions of gains on that risk rally that continued into the Asian session. We are seeing Japanese equities, the yen, bonds also continuing to rally on that ceasefire news, but also a little bit awkward, perhaps, given that truce might end in about 2 weeks, which will be right before the BOJ policy decision. Of course, key what central bankers around the world, especially in this region, are doing. We're watching the KOSPI as well. We're watching the BOK rate decision as well. KOSPI futures finished to the upside of about 1% right there, and we will continue to watch those tech moves, especially around some of those semiconductor names. The Bloomberg dollar index, as I mentioned, wiping out those gains, Heidi, but really all to do with the market moves surrounding the latest headlines from Iran.
Yes, and perhaps some of the sort of confusion over how effective this ceasefire is in application. But it's interesting, Shery, you can see the fragility is really the theme here in terms of how long we see these positive gains being held. You could see that kind of adjustment coming through in some of the other affected assets. Oil in particular, we saw the biggest one-day drop in oil prices since April 2020, and then we saw that rebound, right? And this is how we're sitting when it comes to the picture for New York traded crude, upside of about 2.8%. These reports at the Strait of Hormuz remains still pretty much inaccessible, the near halt of traffic, the biggest ever oil disruption, and that doesn't seem to have been alleviated all that much, at least in the first sort of hours and days of this tentative ceasefire. We're also watching gold, which did have that move, given that we've seen the pullback in the US dollar, Shery, as you mentioned, but steadying after a 2-day gain when it comes to gold. And we're also watching that rally when it comes to bonds, treasuries, seeing a fade there as well. Well, US Vice President J.D. Vance is set to lead talks with Iran in Pakistan on Saturday morning local time. It comes, though, as Tehran says the ceasefire has been violated after Israel continued its attacks on Hezbollah militia in Lebanon.
If Iran wants to let this negotiation fall apart in a conflict where they were getting hammered over Lebanon, which has nothing to do with them and which the United States never once said was part of the ceasefire, that's ultimately their choice.
Let's bring in Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific, Adam Farrar. And Adam, it's the uncertainty of how the next few days and 2 weeks will play out, right? Even to the question of what happens with Hezbollah and the Iranian proxies. We know that Pakistan's announcement included Lebanon, but clearly there are different views if you're speaking to Israel, for example.
That's absolutely right. I mean, I think the next 24 to 48 hours will be incredibly important for these immediate tests of the ceasefire, particularly some sign that the Strait of Hormuz is opening. But more generally, despite obviously market rally and deep kind of relief coming out of the announcement from the president, it seems that uncertainty still reigns as to what is actually happening, what is being negotiated, and what terms are really on the table for what comes next. I think just in the last 24 hours since the announcement, we've seen, as you've already highlighted, continued strikes in the region, particularly involving Israel and Hezbollah, but also other Gulf states. And so the question becomes, are we on our way to at least a pause in this near term as the vice president is heading to Pakistan? Or could this even collapse before then? Right now, it does look like the vice president will get there and we'll see some talks. But beyond that, it remains an open question.
Where are we on the rhetoric surrounding the Strait of Hormuz? Because we're now hearing from President Trump that he wants a joint venture with Iran to collect tolls there. I mean, is a reopening the key part here in actually having the ceasefire last?
I think it obviously has become a central point for the president, despite his assurances earlier in the last several weeks that, in fact, the Strait of Hormuz is not the U.S. concern, right? At times he was pushing other countries, particularly in Europe, to take on that responsibility. But as he laid out this ceasefire, it became central again. And I think that reflects the broader impact of higher energy prices and the risks to inflation and growth that we've been talking about now for several weeks. It is very likely that we're going to see more ships start moving through the Strait of Hormuz as shippers get some clarity from Iran as to how that's going to work, but likely very much under Iranian terms and potentially facing Iranian fees. In terms of what it looks like after these 2 weeks, it's just unknown at this point. And I think that's just going to weigh on energy markets as they try and understand what a new normal looks like. Obviously, as you said, the president has thrown out a lot of different ideas. This idea of a joint venture with Iran where they're both accepting payments, that seems unlikely. But overall, I think what we can say is that the freedom of navigation through the Strait of Hormuz does not seem likely to return as it was before the conflict.
We've also seen more threats of punitive action to other countries from President Trump as well, whether it be NATO nations that he views as not being supportive throughout the course of this conflict, or the threat of 50% tariffs on countries that supply weapons to Iran, so that's Russia and China. Do we know how this kind of fits within the existing landscape of tariffs that are already there?
So the first thing to take into account on the tariff threat is that the president simply does not have the same tool, his IEEPA authorities that he had prior to the Supreme Court ruling that invalidated that. And that raises real questions about how he could implement such a tariff regime. But I think this is really more about messaging. It is likely an attempt by the president to try and assuage concerns from those who think Iran could quickly rearm and become a more potent threat, particularly from the Israeli perspective. And on Europe and these broader threats to partners that did not get involved in the conflict, I think what we're seeing is that in this moment of relative pause, the president is returning to his complaints about these countries, in his opinion, not stepping up, with threats now of potentially withdrawing tens of thousands of U.S. troops from U.S. bases in Europe. And while that may have a negative effect on the economies and the defense situation for some of those countries, it shouldn't be lost that these bases form real benefit to the United States and its logistical flexibility to respond to crises all around the world. So it remains to be seen what that would look like. But I would say that I think Spain and potentially Italy are probably towards the top of the president's list in terms of trying to take some action if he does proceed with it.
Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific, Adam Farrar. Always great to get your insights. And of course, all of these headlines have moved markets. Take a look at how U.S. Treasury futures are looking after the latest Fed minutes also showed officials mulling two-sided risks from the Iran war. There are concerns a protracted conflict could hurt the labor market and warrant lower rates. But policymakers have also highlighted the risk to inflation that might warrant rate hikes.
From my vantage point today, I see the underlying fundamentals of the economy as really in a good place. The question is, what's going to happen with the war? How long will prices of oil and gas stay elevated? And what will be we call these the knock-on effects be in terms of other goods and services? It's really too early to make any statements about that because we don't know how long the conflict will last.
For more, let's bring in our Federal Reserve and economy reporter Enda Curran joining us from Washington. And Enda, of course, we have seen this wild repricing of Fed rate hike expectations, rate cut expectations as well. What is the latest Fed minutes telling us about where we could be potentially headed?
But these minutes were from the March meeting, Shery, about 3 weeks into the war. And it really just laid bare how confusing the outlook is for the Fed in terms of how they might respond. They laid out several scenarios during their discussion. You had one scenario where people said, wait a minute, this war will mean higher gas prices, higher diesel costs, higher energy costs overall, therefore more inflation. Therefore, we need to be thinking about what we can do, and that's by responding with higher interest rates. But also the discussion was having a look at, hold on a moment, if you have higher energy costs, that's obviously going to spill over into household budgets and into business people's plans and will ultimately slow the economy down. And that's where you get into a scenario where it's weighing on the jobs market and on the economy, and maybe they need to cut interest rates. They didn't have a clear answer for either. They were making the point that either of these outcomes are possible. So much will depend on how long the war goes on. Remember now, these minutes are from the mid-March meeting, so it kind of predates a lot of the recent developments in the war. But it depends on how long the conflict goes on, and then depending where that goes, that will dictate how ultimately the Fed will have to respond. But right here, right now, they are worried. They're worried about the inflationary impact. They just don't yet know how severe it will be.
And we'll be getting some readings, some data on that might, give us a little bit more detail on that broader picture. Are we looking at this point to see how that feed through to gas prices at the pump as a result of the war in Iran is going to feed through to inflation?
Yeah, I think it's all about that, Heidi. I mean, what the Fed wants to say here, but nobody really wants to say it out loud, is that this could be transitory. This idea that, look, you have this near-term spike in energy costs, they go up, maybe there's an off-ramp in the conflict, energy costs slowly start to come down, not necessarily back to where they were pre-war, but they come down. That's probably the more benign outcome for the Fed. But the bigger worry is how pervasive and how long-lasting these higher costs might prove to be. And a lot of people here, by the way, are talking about diesel costs. And the same story all over the world. It's about the cost of trucking and delivering goods and delivering food and everything else. And that's going to start bleeding through into consumer costs on the high street. At the same time that the Fed say tariffs there's still a bit of an aftershock from tariffs and the price of goods here. So when you add it all up, the warning in the minutes today was, if anything, inflation might be nudging further away from their 2% target than towards it. So there certainly is an underlying concern about what's going to happen to price and cost of living as a result of this war.
Our Federal Reserve and economy reporter Enda Curran in Washington. And these inflation fears, of course, pervasive for many central banks in the wake of this war in Iran. We'll also be looking at the rate path ahead when it comes to the RBNZ. Later, RBNZ Governor Anna Breman will be joining us in the next hour. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're holding on to sort of that positivity associated with this ongoing ceasefire, even as we have accusations from the Iranian side that agreement has already been violated. We are seeing that return to gains now when it comes to trading in crude, rising after the biggest drop since April 2020. The Strait of Hormuz remaining largely inaccessible at this point, and those Israeli attacks on Hezbollah in Lebanon continuing as well. US futures showing downside at the moment. Let's bring in George Schultze, who's a founder and managing member at Schultze Asset Management. George, great to have you with us. The price action that we're seeing, the sort of sense of refrain now from taking too much risk, is this just reflective of how much uncertainty there is for what's to come in the next days and weeks of these talks?
Absolutely. There's an incredible amount of uncertainty with this war. It was certainly premature early on in the war when everybody was expecting it to last just a couple of days. Now you have this temporary ceasefire, which is great news, and the markets have rallied. So have the energy markets. There's been a little bit of a drop in price of oil and gas. So that's certainly a favorable and positive development. But there's still a lot of uncertainty. I mean, we're talking about a war. We're talking about a ceasefire. But, getting the message out to all the individual drone operators, I think takes time, and it's a slow process. And frankly, we still have, this is just a temporary ceasefire. So I think we have a couple weeks, where the parties will, I hope in good faith, work to try to negotiate a better, broader deal. And I don't think that'll be easy to do, as you can see, leading up to this temporary ceasefire.
JD Vance is headed in for these first round of talks over the weekend. What do you think markets would be expecting or hoping to see? Do we see kind of this treading water status quo action until such time as there's more positive news?
Well, I think we should expect continuing market volatility. And let's face it, if you look back for the last several years, the broad equity markets have rallied for year after year. Investors now, I think, are wise to remain nimble, to not get involved with less liquid things. We've seen a lot of concerns about the private credit market in the last few weeks. This war, the added uncertainty from the war, what its implications are for, the Fed potentially reducing interest rates and inflation coming through with the cost of higher energy for most businesses, it's concerning. And there's a lot of uncertainty. Even after you have a peace deal, it is a temporary deal only, and it's still not clear how long it will take to repair all the damaged infrastructure and the damaged, facilities that were caught up in the conflict. So it is, I think, worthwhile to remain nimble and to be ready to find value-oriented long securities, as well as to potentially find interesting short ideas because of all that's changing in this macroeconomic environment.
Where do energy assets stand in all of this? Because we have seen, of course, that repricing during the Iran war, a downside right now on the potential that the ceasefire might hold. But at the same time, we have that long-term implication of data center buildouts around AI.
That's right. That's right. There's a greater and greater demand for energy, not just in the U.S., but globally. The last thing the market needed was this supply shock that we're seeing today. Yes, there is a temporary ceasefire, but there's also a backlog now of oil and gas that has not been delivered, of LNG that has not been delivered, and also other products, fertilizer, aluminum, you name it. There's probably a choke in the commodity market at some point or another. And, I think something like that does not reverse overnight. We think here at Schultze Asset Management, we think for the domestic oil and gas producers, it's a more favorable environment going forward. It's really on a case-by-case basis. You have to look at them individually to figure out which have hedged their production or not hedged their production, and will continue to benefit from these higher commodity prices that we're seeing.
What about the power demands coming from the build-out of artificial intelligence, especially at a time when we're also looking at these tech stocks that perhaps have seen this valuation reset?
Yeah, unquestionably, a kind of tired and very mature market, the electricity market, suddenly has this new boost for demand from AI and all the new economy applications, whether it's electric vehicles or new economy, environmentally friendly buildings, things like that. But AI really helping to, with all the data centers and all the data center build, really driving a new level of demand for electricity. And because of that, demand for natural gas, also for coal, and other forms of electricity as well. So we think that's sustained, that will continue. But we'll have to watch and see how demand for data centers evolves going forward, because there is a risk that maybe you've seen a little bit of an excessive build out, and maybe, you've got a little bit over your skis in terms of building out too much supply for the future. So we'll see how that all works out going forward.
You touched on private credit earlier, and obviously part of the story is retail getting in over their skis, right? Do you think that's where it's ring-fenced? Are there more sort of systemic risks? Because institutional voices don't seem too concerned at this point.
Yeah, we think it's actually a really big concern. It's unclear if it's going to create systemic risk, but it certainly has the possibility that it will. I would say maybe it's more than a 20% chance, because this is so pervasive. The latest readings I've read, and this is from Goldman Sachs, is that the total private credit market is about a $3.5 trillion market. And in the last iteration, yes, it was broadly marketed more towards retail investors, many of who typically need more liquidity than what private credit can offer. Also concerning that these software companies, which represent such a significant portion of the private credit market, about 20%, and in some cases, in some portfolios, up to 30% or more. But the concern is that these software companies might be disrupted altogether, and that might create an increasing level of defaults and lower recoveries for software companies and thereby private credit. So it's a new industry. It's a new form of non-bank lending that hasn't really been tested through a full cycle. And yes, we think there is risk that it could create systemic risk, not just for the retail investors that might get stuck in it, but more concerningly, the possibility that it might tie up insurers, life insurers that have gorged on this private credit and that, for which it represents a significant portion of their balance sheet. We wonder, for those life insurers that have very thin capital ratios, if there is, a default cycle on private credit and software companies start to drop, how fair are their marks on those balance sheets? And what would that mean to the equity capital buffers if they had to mark those securities down significantly?
Yeah, something to keep our eyes on, especially with that underperformance of software again in the overnight session. George, good to have you with us. George Schultze, founder of Schultze Asset Management. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at how U.S. Tech stocks moved in the overnight session because we had the underperformance of software stocks like Palantir, Workday, Salesforce as well. We actually saw the S&P 500 software index falling more than 1.5%. And you can see the last close there also of the index around software down more than 2.5% as well. We saw some retail flows into Apple, though, and we also had some big news out of Meta. It's debuted its first AI model known as Spark. It's the first since CEO Mark Zuckerberg embarked on a multi-billion-dollar overhaul of the company's AI organization to keep pace with rivals. Bloomberg's tech reporter Riley Griffin joins us now from San Francisco. Riley, so what are the key takeaways of this new development from Meta?
Yeah, this was a highly awaited moment, 1 month in the making. This model took 9 months to create, led by Alexander Wang, the new leader of Meta's AI lab. And one major departure here from the prior strategy is that this is a closed model. Its back-end code is not being made available to developers, more in line with competitors like OpenAI and Anthropic. This is a real change in strategy for Meta, which has presented open source models for years.
What about the capabilities that we know of?
Yeah, we're still learning about these capabilities. We spoke with an executive last night who said that while this model is not yet at the frontier, the bleeding edge, competing with ChatGPT and Claude, there are some places where it's high performing. They shared with us some benchmark statistics that show that Meta has progressed. And we see the market reaction in the face of that, up more than 6%, with analysts and investors commenting that this is a clear progression, and they're eager to see what additional models come along the way. Bigger models are still expected. Spark is named for sparking the process. So more to come still, and Wall Street is waiting eagerly.
Riley Griffin, our Bloomberg tech reporter, joining us from San Francisco with the latest on Meta. You can, of course, get more on those big tech stories on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech Asia and other shows on Bloomberg.com/videos, and take a look at some of the assets that we're keeping track of after we saw that risk rally continue in the overnight session. We continue to watch the headlines around the 2-week ceasefire in Iran. And of course, a powerful short squeeze also that we might have seen in the Wall Street session as hedges unwind. This is Bloomberg. Take a look at how these U.S. assets are trading after we saw the dollar wiping out its gains for the year. That haven premium really unwinding on that 2-week ceasefire in the war in Iran. We also saw that upside when it came to the S&P 500 in the overnight session. So that relief rally continuing. Oil prices, though, gaining a little bit of ground after plummeting in the previous session, and all to do with what's happening in the conflict there. But of course, as we continue to get some conflicting signals out of that that ceasefire, given that some countries in the region are still under attack. You can see the dollar holding at that 12.02 level, and S&P futures right now seeing a little bit of downside. Let's bring in Barbara Leaf, Senior International Policy Advisor at Arnold & Porter. She previously served as U.S. Assistant Secretary of State for Near Eastern Asian Affairs under the Biden administration, Near Eastern Affairs, I might say. Ambassador, it's really great to have you with us. I mean, we continue to see these attacks happening despite the ceasefire. Doesn't necessarily mean a peace deal is over, but what sort of indication does it give us about where all the parties are in these negotiations?
So, look, on the one hand, it's to be expected in a very hot conflict. When you move from that to a ceasefire, you can always have some messiness on the back end where, communications are such that units are not all getting the same orders at the same time. That said, it appeared that the strikes today that hit energy facilities in Kuwait, Bahrain, Saudi Arabia, and most importantly, UAE, were more than that. They seem to be a reprisal strike for an earlier strike on the oil facilities on one of Iran's islands. Moreover, there is a real dispute between the administration, Israel, and Iran over one important term of the so-called 10 points of the Iranian proposal, and that's whether there's a ceasefire that extends to Lebanon. And clearly the U.S. and Israel do not view that as being part of the part of the ceasefire.
Ambassador, we know that Vice President J.D. Vance is headed to Pakistan for negotiations, and he said at an event recently in Budapest that the military objectives of Washington in Iran have been achieved. So what are the key sticking points right now, aside from Lebanon? Is it just bringing all of the parties on the same agreement like Israel?
Well, no. So I would put it more that there is a very wide gulf, a gap between the maximalist positions that are framed by either side, and even in terms of what those 10 points contain, that the president referred to last night is a piece that is in dispute. There are actually several versions of Iranian 10 points circulating. But the sort of pass-fail question for Vice President Vance and the negotiators is whether they can essentially drive a conclusive set of arrangements that get Iranian hands off the Strait of Hormuz, so that the Strait of Hormuz, which is an international artery, an economic artery for the globe, can be restored to the status quo ante, which is to say, before the war, it was viewed and treated as an international waterway with the freedom of navigation, freedom of the flow of international commerce.
As you say, there have been different versions of the 10-point plan, but all of them seem to contain points that, if they are conceded to in these talks, would mean that several steps back have been taken since the position from the beginning of this war in terms of what Iran has gained, right? So I suppose that goes to the question as to what were the war objectives and how much have they changed to this point, and what has the US and its allies actually gotten out of it?
Well, those are really, really huge questions that don't have a clear answer at this point. In one sense, the administration is framing this as mission accomplished. The military objectives, as you heard from the vice president, but also from the Secretary of Defense, from the president to a large degree, the military objectives are well and truly finished, in which case, what are they meeting about? Again, it's a pass-fail test as to whether they can restore freedom of commerce to the Strait of Hormuz. But then you still have the whole, leftover problem, which is not insignificant, which is to say the disposition not only of the highly enriched uranium, almost 1,000 pounds of it buried somewhere probably in several places in Iran, but also the future of that program, period, and how you tie it off with a set of negotiations. Those are the two really critical pieces. Gulf countries really want to see delimitations on Iran's ballistic missile inventory, the range, and the inventory itself. So all of these are, in negotiations in and of themselves. In my view, very unlikely that this can all be done in 2 weeks' time.
And if you take a look at some of those points, we know that Iran has asked for reparations previously in demands that were made. There are also reported demands about the removal of US military bases across the region, of release of frozen assets, sanctions, both primary and secondary, being lifted. You mentioned the sticking point of the Iranian proxies around the region, including Hezbollah. Do you see wiggle room on any of those topics?
Certainly. So, look, on the nuclear program, Iran, according to a variety of sources, has shown a certain amount of flexibility in past discussions about the disposition of that highly enriched uranium. It holds to the principle of the right to have domestic enrichment of uranium on its soil. But again, there are things that you can come up with that are sort of face-saving modalities. But the point is, you must tie all this off with a negotiated set of arrangements so that you have an intrusive inspection regime that can monitor that all of the elements are being complied with. For the proxies, frankly, I doubt very much that's something that you can seriously do at the negotiating table. I think that's where the military and other tools come into play to further weaken them. The ballistic missiles will be a tough one as well.
Ambassador, let me get your take on global alliances post the Iran war. We continue to see President Trump blaming U.S. allies for not helping right now on a post in Truth Social as we speak. He says that NATO will not be there if we need them again. What will global geopolitics and alliances look like after, on the other side of the Iran war?
So look, one of the terrible byproducts of this 5.5-week war was the way the president and the administration have publicly berated and treated the alliance, our closest partners. They were not consulted at the front end of this before the war, and then they were simply pushed to join or to support in some fashion, ill-defined, joining an operation for which they too had no understanding what the end goals were. Those end goals still are not well defined. So to my mind, it was really a terrible way to treat an alliance that has stood by us and has been the sturdiest set of partners for us through some really terrible events, including the aftermath of September 11th. NATO soldiers deployed to and fought bravely in Afghanistan and died for that cause. And they have been with us in many other endeavors. But you have to consult NATO as an alliance before you ask the alliance to join you in an out-of-area endeavor. So that's a very terrible fallout. And I think it's very unfair to blame the members of the alliance.
Barbara, I just wanted to get your views on the choice of J.D. Vance to lead these negotiations. We've seen him largely sort of not in the spotlight when it comes to this conflict. In fact, in recent days, he's been more participatory when it comes to the Hungarian election issues, right? Do you think this is a choice that's being made by the administration, or is it a preference from the Iranian side?
No, clearly the president has a lot of confidence in the vice president's ability to get in there, sit down at the table and drive a hard deal. This is going to be a critical set of discussions. As I said, it's almost impossible to imagine nailing down a set of arrangements that are so complex, so difficult in just 2 weeks. But he has entrusted the vice president with this. I don't think it's just a matter of the Iranians asking for him. I think this was vesting him with a really important mission.
Barbara Leaf, Senior International Policy Advisor at Arnold and Porter there. Well, we are, of course, also watching the bond space. Treasury's wiped out an early rally on fresh doubts around the ceasefire in Iran. Let's bring our Chief Asia FX and Rates Correspondent, Ruth Carson. And Ruth, this is another space where we're seeing that fade of the initial exuberance, right? From France to Germany to the UK, mega rally overnight. Treasury's less so. We are seeing US bonds now seeing really that fade.
Absolutely, and it underscores the fragility of the world and markets that we're living in today. Ceasefire hopes really fueled an everything rally just 24 hours ago in Asia. Yet here we are, waking up, traders getting to their desks, and Treasuries ended the day flat yesterday, and futures are slightly under pressure. We saw Aussie bonds, for example, selling off again this morning, and it just shows you that inflation fears haven't really gotten away. Traders are still worried about the situation in the Middle East. We obviously saw Tehran come out with statements as well, saying that some of the ceasefire, there's some doubts around the ceasefire there. So all this will be weighing on investors' minds. Do you buy? Do you not buy? Do you hedge your positions? Because everything is still very much fragile and up in the air.
At least when it comes to the haven premium with the US dollar seems to be unwinding. What does positioning look like right now?
Yeah, the Bloomberg dollar spot index, as we know, wiped out its year-to-date gains. And remember, just this time last week, it was up virtually against every major currency in the world. And here we are, flat. And it shows you, yes, that there was a hefty premium, a war premium, a petrodollar premium that was baked into the greenback. And investors are now thinking, has it gone too far? Has it gone too hard? We definitely saw some, selling of the dollar yesterday against everything, Aussie, Kiwi, even yen, Swissy. I had investors actually reaching out, during the European time zone going, whoa, what's going on here? These moves are huge. But again, here we are, dollar's flat, and everyone's sort of passing headlines again.
In terms of some of the Asian beneficiaries, we saw that lift really driving some of the gains across the equity space in the region. Where do you see as the biggest winners against the dollar if investors are judging that this strength, the haven demand, is overdone?
Yeah, so the so-called risk-on currencies in particular, for Asia, that is the Australian dollar, the New Zealand dollar, really sensitive to risk sentiment and commodity cycles, they're poised to benefit. Now remember, over the last 24 hours as well, there was a lot of headline trading, so the algos would have been out in force, buying the Aussie dollar, the Kiwi dollar in particular. But again, can we truly unwind the haven trade when it comes to the dollar? I think the Treasury's action, for example, underscores that things are not still smooth sailing just yet. So we can't rule out further strength on the dollar from here, but definitely a lot of the beaten down currencies, particularly the risk on currencies, will be of interest to investors right now.
Ruth Carson, Chief Asia FX and Rates Correspondent there with the latest on the markets. We do have more ahead on the Asia trade. This is Bloomberg.
Well, we've already seen an increase in traffic today. Hopefully we'll see an increase in traffic tomorrow. We actually think that we are seeing signs that the Straits is starting to reopen. I think you guys have probably seen oil prices have come down. So I think the oil markets, the gas markets are seeing the same thing.
US Vice President J.D. Vance following a ceasefire agreement between Washington and Tehran, and of course the Vice President headed to Islamabad for those first round of talks this weekend. Well, ship owners and insurers have welcomed the news but warned that more details are needed to determine if safe transit through the Strait of Hormuz is possible. The waterway remained largely blocked on Wednesday. Let's bring Stephen Sepchinsky, who leads our Asia energy coverage. And Stephen, you see that sort of recovery in oil prices as perhaps an indication of just how much uncertainty there remains as to when access will be granted, in what form that will be, what additional costs and what that structure is going to look like.
Yeah, absolutely. I mean, let's just look at yesterday, right? Part of the deal was supposed to be that Hormuz would be open. And both sides actually at the beginning of the day, on Wednesday, it seemed like that was the case in terms of their comments and the rhetoric from both Iran and the United States. But when you actually look at the ship tracking data, only 3 ships appear, or at least according to ship tracking data, have gone through. Maybe others were dark, but according to the data, just 3 went through. Now, before the war began, you were seeing 145 ships, or 120 to 140 ships go through on a daily basis. So this is a very small amount. It doesn't really show that we're seeing a huge recovery. Of course, it's still early days. There was no expectation that we would go from 0 to 100 immediately, but I think still there was an expectation that you would see a larger trickle, or that would kind of get into a wider stream. Of course, there are a lot of uncertainties. Will Iran be taking payments or fees, tolling fees rather, while the ships go through? Will they have to work with the Iranian military? How will insurance work? Will the ship owners and the people on the ship feel comfortable going through the Strait? Because still, there is tension in the region. While there was a ceasefire, there still has been attacks on infrastructure. Iran supposedly says that, according to local media, saying that they've halted some passage through Hormuz as well. So there are a lot of mixed messages, which makes the situation very unclear and likely leading to that slight increase in oil prices today.
And what happens to alternative routes, right? I mean, we thought the Red Sea perhaps was one way, especially with Saudi Arabia's oil pipeline. We're now hearing that could be under attack as well.
Yeah, so that was attacked yesterday by a drone. It's unclear exactly if these attacks will continue, because the whole idea was that with the ceasefire that this would end. But this route for Saudi Arabia has been key for rerouting its oil from where it would normally flow through Hormuz into the Red Sea and out towards customers in Asia. Now, if that route is continuously attacked, if that bypass somehow is shut, then you are going to see a much bigger issue, because there are a few other alternative routes out of Hormuz. I mean, for some countries, there are no alternative routes. You look at Qatar's giant liquefied natural gas facility. It's the world's biggest, and it's been shut since early March, and there is no alternative route for that gas. All you can do is produce it at the facility in Ras Laffan and send it through Hormuz. So as these alternative routes get attacked or as they're threatened, there is further risk that perhaps even the Red Sea could become an issue. Another part about the Red Sea as well is that the Houthi rebels, the Iran-backed group, a few weeks back had increased attacks on Israel. There are fears that maybe they will get pushed wider into this conflict. Famously in 2023, they had basically halted traffic through the Red Sea because of their attacks on the ships in that area. Will they do that again if the ceasefire doesn't hold? Something else that the market has to weigh.
Steven Slapczynski, who leads our Asia energy coverage, there with the latest on the Strait of Hormuz and, of course, its impact on energy assets. Later on the China show, I'll actually be speaking with Japanese shipping and logistics company Mitsui O.S.K.'s new CEO. I'll be asking him about the situation at the Strait of Hormuz and also how it's being impacted by the ongoing war in Iran. That interview coming up at the times of your screen, Heidi.
Shery, some of the top global headlines that we're also following at the moment. The Japanese Prime Minister Sanae Takaichi has called for a lasting peace agreement during a call with the Iranian president. She says that the ceasefire and the situation in the Strait of Hormuz were among the topics discussed. She also reiterated Japan's request to secure the safe passage of Japanese vessels through the waterway. Israeli Prime Minister Benjamin Netanyahu says his support for the US-Iran ceasefire won't affect his plans against Lebanon. That's where the military is fighting Iran-backed Hezbollah militants. But opposition politicians have expressed concerns that negotiations are being conducted on Tehran's terms. Bloomberg has learned that the US is considering lifting sanctions on Venezuela's central bank to facilitate the flow of billions of dollars into the country's battered economy. Sources say the move would allow proceeds from oil sales to circulate more freely through Venezuela's financial system. The Trump administration is looking for ways to ease economic bottlenecks in Caracas caused by Washington's own sanctions framework. More ahead on the Asia trade. This is Bloomberg. The latest on the corporate front now, and an easing of hostilities in the Middle East may create conditions that bolster private equity deal making through the rest of the year. That's according to Blackstone's global head of private equity strategies, Joe Barata, who spoke exclusively with Bloomberg's Danny Berger.
You had a major global conflict, geopolitical situation, which hopefully is resolved. None of that is a great recipe for lots of deal doing. That being said, I think we will see a resumption in deal activity, and this year will be, for the rest of the year, I think it will look like a normal year of private equity.
Well, Delta Airlines is expecting to incur more than $2 billion in higher fuel costs through June amid the Middle East conflict. Airlines are now weighing how much of those added costs can be passed on to passengers without hurting demand. Delta says bookings remain strong in premium, corporate and peak summer travel, but is seeing weaker spots of demand in Europe and Mexico.
We see actually really good demand right now across all entities. We're going into peak summer for transatlantic, and that looks very good right now. Transatlantic was a bright spot for the first quarter. So no, across all the booking curves and across all the booking periods, we're seeing strong demand.
And take a look at some of the stocks that we'll be watching when trading gets started in Australia, Korea, and Japan. Of course, we have seen the tech sector in the overnight session see a strong rally, especially in the Max 7 stocks. Goldman Sachs now saying that investors need exposure to semiconductor companies, and the pick and shovels of AI spending accelerates in this sector. So do watch out for the big two in Korea, Samsung, SK Hynix, also chip suppliers here in Japan. We have also heard from Meta and their new AI model, and that sort of leading to some concerns that it could threaten some software plays. So do watch out for the likes of SoftBank, which has, of course, major exposure to OpenAI. And we had seen software stocks in the overnight session already underperform the broader markets. We are headed towards the market opens in Sydney, Seoul, and Tokyo with a little bit of a mixed picture. Nikkei futures pointing to a little bit more upside, but we're seeing early in the Australia session downside pressure, and Kospi futures finishing down 0.7%. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens after we saw another relief rally in the overnight session, Haidi. And this, of course, as we continue to see that 2-week ceasefire, but still some signals that whether or not the durability of that ceasefire may continue, given that we are seeing some countries in the region still under attack.
The gap that remains when it comes to fighting against Hezbollah in Lebanon in particular seems to be a sticking point. A lot of uncertainty as to what this 10-point plan from Iran even looks like. But I guess we will know more with the Vice President heading to Islamabad for talks this weekend. But as you say, a lot of fragility for these markets.
Yeah, not surprising then that we're seeing a little bit of upside when it comes to oil prices early in the Asian session. So we'll be watching the energy sector at the opens in Japan and South Korea. We have seen, of course, the Nikkei already gained for the last 4 sessions, and the topics also holding steady. The Japanese yen at the moment holding at that 158 level after some strength against the US dollar. We'll be watching the JGB's market as well, as we saw a lot of volatility in the treasury markets as well. Take a look at how Korea is coming online. We have seen the tech sector, of course, they're outperforming the markets. We saw the Max 7 seeing big gains, so that will be a key point that we'll be watching. And the Korean won also a little bit of downside, but after strength against the US dollar, which has wiped out its gains for the year.
Speaking of gains being wiped out, we saw that fade when it comes to US Treasuries, right? The global bond rally, though, we saw everything from European bonds, but really that concentrator when it comes to Treasuries didn't last for terribly long. We had that unwinding of the overnight gains with yields continuing across the front end, the belly of the curve, rising to essentially what looked to be unchanged. We're also seeing a little bit of a pullback when it comes to gold as well after initial reaction again when it comes to the fallback that we've seen in the US dollar continuing. That should permeate through to some gains when it comes to Aussie currencies as well as Asian currencies, I should say. Speaking of the Aussies, we are getting that start to trading here in Australia as well. We had really the reversal of fortunes given some of the big gains we've seen for the energy and the LNG names, the likes of Woodside and Santos, and a lot of that is now being kind of in question with this pretty fragile ceasefire agreement still on foot. We are seeing downside of just about 0.5% when it comes to trading here in Australia, the Aussie dollar holding just above that 70 US cent level. Let's take a look at how markets are shaping up this morning. We're bringing out Bloomberg Executive Editor for Asia Markets, Paul Dobson. So, Paul, that exuberance, in I guess its purest form, didn't last very long because there are just that many levels of uncertainty here in terms of the outcome, not least of which is if you're looking at the Strait of Hormuz, it looks like a very complex reopening if we actually get it.
It does, doesn't it, Heidi? Morning. I think I wouldn't necessarily characterise it as that mood is going away. You know, the moves that we saw yesterday were just so stark and extreme that it's more than likely that you would see a phase of consolidation after that rather than a continuing of the rally. But as you say, a lot of conflicting headlines overnight for us. So when we came in this morning, you know, the picture does look muddy. There were still some attacks flying in different directions, and what the market is really focused on, as you rightly say, is that actual reality of how many of the ships are leaving the Strait of Hormuz. And so far it's still a trickle rather than a flood, and the markets would really like to see more of a steady stream to get that confidence that the moves that we saw yesterday in the oil market in particular are going to be validated by events. Well, I was going to say on the ground, events at sea, I suppose, is the way that you would phrase it. So very much a watch and wait now. And it may be that we sort of stay in this sort of holding pattern until we hear more from those talks at the weekend in Pakistan as well.
And we have seen, of course, the ongoing story around artificial intelligence and perhaps more expectations that valuations could have been reset, especially on Wall Street.
Yeah, I think so. It was a pretty big recovery. I started, obviously, in our day yesterday with some significant moves in Korea and in Japan as well, for that matter, around the chip sector. I think that, you know, the market has been whiplashed so much in terms of momentum following trades in particular, flipping from long to short. Now another big headline move and risk and short squeeze pulling in the other direction. And I guess we sort of, you know, can at least refocus on some of those other narratives, having been so dominated over the last 1 month by the conflict in the Middle East. And in terms of AI, we had a couple of releases overnight, I think, that reminded us to pay attention to what that looks like in terms of a destructive impact and a competitive impact, but also the positives. So, you know, continue to watch and wait on that front as well.
Bloomberg Executive Editor for Asia Markets, Paul Dobson. Well, New Zealand's central bank kept its official cash rate at 2.25% at its policy meeting on Wednesday. It's warning that inflation is likely to accelerate in the second quarter. That decision comes hours after the US and Iran agreed to a tentative ceasefire. Joining us now is Anna Breman, who's a governor at the Reserve Bank of New Zealand. Governor, really great to have you with us, and I can't sort of begin to really fully appreciate the complexities of making a policy decision in this sort of global macroeconomic and geopolitical environment, right? Can you talk us through some of those challenges, particularly as changes to the outlook with the ceasefire was happening almost in real time?
Yeah, thank you for having me. It's very good to be here. Well, what we did yesterday is that we decided to have the OCR, our policy rate, on hold at 2.25%. Of course, we are seeing and expecting higher near-term inflation and somewhat weaker growth in the New Zealand economy. And then what we are really focused on is the medium-term inflation and ensuring that medium-term inflation is at target. And of course, in this environment, it's very hard to do forecasting. We had the meeting at 9 a.m. in the morning. It was announced at 2 p.m., so there was a lot of information in between. But we knew that that could happen, so we had taken that into consideration, of course, at the time of the meeting.
If in fact we see global energy supplies restored, some of the risks to global supply chains minimised in the coming days or weeks or months, and we accept that the risk to inflation is a near-term and a temporary one, do you foresee a scenario where easing is back on the table?
Well, we are more focused on ensuring that medium-term inflation does not increase. We see that the balance of risks have shifted in terms of inflation and more risk on the upside because already right now in New Zealand, fuel prices have gone up considerably, both petrol, but in particular diesel, and that's important input into transport in general, but also into the agricultural sector that is big here. And that risk getting passed on then into food prices and other kinds of prices. So we are expecting somewhat weaker growth, but we are concerned that medium-term inflation pressures could be higher. And if we start seeing inflation expectations moving up, if we see that core inflation is moving up, if we see wage growth picking up, then we said that we will act decisively to ensure that medium-term inflation goes back to target, the midpoint of the target, and that's 2%.
Government, does that put a July rate hike on the table? Markets seem to be pricing that in.
Well, we don't have a forward-looking OCR track at this meeting. When we do our monetary policy statements quarterly, we provide our guidance for the OCR going forward. Now what we're saying is we are focusing on the things that we are looking at to decide whether or not we need to hike the OCR. And in particular, we're looking in any signs that medium-term inflation pressures are going up. So that is things like the inflation expectations, wage growth, if we see core inflation starting, not just headline inflation, because we know headline inflation will be going up, but also core inflation moving upwards. Those could be reasons to do a rate hike.
When it comes to inflation, do you believe the price setters within the country, firms, are acting appropriately to reflect higher prices? Or is there a danger and risk that they could be taking advantage of the situation?
Well, price-setting behavior is always really important, and there are many different ways of looking at it. We're engaging actively with the business community, trying to both do surveys, but also actually meeting with businesses to get good information currently. What we're hearing now is that some firms are planning on hiking their prices. Some are doing temporary fuel surcharges that could then be removed if we see the fuel prices going back down. And some people are saying that they can't pass on higher costs to consumers right now because demand is too weak. And exactly how this will play out, it's obviously hard to know, but we're collecting all the data we can to see where it's going. But there's always a risk that there will be some opportunistic price-setting behavior in this kind of environment.
Governor, I wanted to get a better understanding of perhaps maybe it's a gap or a misunderstanding of business confidence levels. You've talked about these surveys and that weakness in demand, because business confidence has been pretty firm for a while now, and you see other indicators like private sector credit around 4-year highs. Where is the weakness that you see there, given that optimism still remains pretty high?
Well, it's a great question. So what we've seen over the past year is that it's been different across different sectors in New Zealand. Some sectors, particularly the exporting sector, have been doing really well. What we call regional New Zealand, often related to agricultural products, have been doing really well for quite some time. And we saw that broadening, which was really positive. And we saw that in January and February of this year. And then now we're getting some business surveys that includes March. And in the March month, in particular, some surveys that have data towards the end of March, then you see business confidence going down quite significantly. So we do expect to see that firms will be somewhat more cautious in the near term. But now if we do see the ceasefire, and the ceasefire holds, which is highly uncertain, then I'm rather optimistic that we can see growth coming back and picking up rather quickly in New Zealand, because we were seeing a stronger recovery at the early stages of this year.
So does that assume that the worst will be in April's data? You talk about a quick recovery. Does that mean recession is not necessarily sort of within the realm of what you might expect? And how does, I guess, the level of stimulus also play into that modelling too?
Yeah, so, the economy is still benefiting to some extent of the cuts that the Reserve Bank did in the last year. There was rate cuts from 5.5 down to 2.25%, and that is providing a little bit of stimulus still to the economy. But the difficult issue now is to know how long this conflict will last and how big the consequences will be, because it's also supply disruptions. Obviously, New Zealand consists of 2 main islands, and we're very dependent on shipping, and exporter needs to get their goods out of the country and not just to import things. So if we see a swift resolution to this conflict, then I think we will see stronger growth this year. We do not expect negative growth at this point.
And yet, Governor, of course, as a central banker, also your job is to think about the worst case scenarios and try to mitigate them, right? So indulge us. What would be some of those scenarios, especially given that you continue to emphasize that the ceasefire and how it holds is pretty uncertain? What are some of the actions that the RBNZ is prepared to take?
Well, our mandate is very clear. It's medium-term inflation and keeping inflation low and stable. So if we do see that medium-term inflation starts picking up, then we will act decisively and timely, and that means rate hikes. Exact timing will depend on how this plays out, to what extent we see second-round effects, like we see inflation expectations going up over the medium term, wage growth, etc. But we will ensure that inflation returns to the 2% midpoint of the target band. And that is our job, and that's what we are focused on.
And how would that also impact your growth outlook?
Well, of course, if we hike the policy rate, that's likely to dampen growth, and then it depends on how strong demand is overall. For example, our exporting sectors may still perform really well. There are some signs that prices are increasing for the exporting sectors. There's also some particular issues that means that they are getting some payments this year. That means they could increase investment quite considerably. So overall, we will look at seeing how much we need to hike to dampen growth enough to ensure the medium-term inflation target.
Governor, I wanted to ask about the labour market as well, more specifically to the labour market dynamics pertaining to this, pretty sizable brain drain that New Zealand is seeing. Obviously, here in Australia, we're the net beneficiaries of that. But can you comment on that and, how much that concerns you?
Well, this is something that we're following very closely. So unemployment is still relatively high in New Zealand. The last numbers at 5.4%. We were actually seeing employment growth. So the employment were looking better, but was also more people entering the labor force again. And that meant that unemployment was still at a relatively high level. What we're seeing in terms of the migration data, the latest numbers show less outward migration and more inward migration. So it's looking like more people are coming into the country. And of course, that's good for the labor force over the medium term. But we are aware of the fact that there's been quite a large outflow of people. And if that were to continue, that could put some upward pressure on wages here if we see labor shortages. But given that right now demand is still weak, we're seeing relatively modest wage growth.
How does that feed into broader confidence when it comes to the economy, be it you're talking about consumers or households or job seekers and graduates and so on and so forth? Do you look at elements like confidence and growth as being secondary to the key focus on inflation at the moment?
No, but all of those things are important in terms of the inflation outlooks. Of course, it's important. And consumer confidence has been On the weaker side, it was actually improving lately until the Middle East crisis hit. So we were expecting to see higher household consumption, a stronger labor market, and we think that that could happen again. But again, it depends on the duration of the conflict. But for us, we always stress that we need to have low and stable inflation, because that's how households get real wage growth and purchasing power over the medium term. So we will stay focused on ensuring low and stable inflation, because over the longer medium term, that means that it will also support the labor market and households' purchasing power.
Hey, Governor, and talking about the labor market, of course, we know long term that artificial intelligence could really bring transformational changes to the dynamics of an economy. How are you factoring that in? And perhaps also another challenge ongoing right now, that New Zealand is not necessarily seen as an economy that benefits directly from the build out of artificial intelligence.
Well, let me say two things on that. So the first one is that we've seen a lot of investment in AI in our trading partners. So that has benefited exporters, because growth has been globally a bit more resilient than expected. Second of all, there are some signs that AI investments in New Zealand are starting to pick up, but from a very low level. So it's something that will be important in coming years, both in terms of how it impacts the labor market, whether it replaces some jobs, create new jobs. There's also potential for higher productivity growth with more AI adaptation in New Zealand, and that would be welcome, because productivity growth have unfortunately been relatively weak over the past years.
And Governor, talking about exporters, what are your expectations about the impact of some of these trade tensions and tariffs that have been on the back burner right now, given the Iran war? But of course, for the past year, we've just been trying to understand the implications on global economies, given the tariff concerns.
Yeah, what we've seen here is that the exporting sector, despite the uncertainties around tariffs, have been doing well. Particularly the agricultural sector, but also manufacturers have been performing well. But this is still an environment that causes some uncertainty, can make it difficult for firms to plan. But the New Zealand exporters have been very successful over the past few years in terms of finding new markets and growing the exports. And also it's been good in terms of the export prices for the New Zealand exporters.
There's now a handful of economists are pricing in recession for this year for the Kiwi economy. Can you give us your projections on that? And I guess the bigger question is, when you have, as Shery mentioned, these tariff shocks, these policy shocks that come from major trading partners, energy and supply side shocks that come from geopolitical risk, how sort of, well protected is the economy there, and are there ways that you think, from a policy-making perspective or from a fiscal policy-making perspective, that things could be improved?
Well, I think at the Reserve Bank, our job is really to focus on our mandate, and that is low and stable inflation over the medium term. In terms of the growth outlook, we don't have new forecast at the decision we did yesterday. That we will have new forecast at our May meeting. We do that quarterly, and then we'll give you an updated view on growth. What we're saying right now is that we expect growth to be somewhat weaker in the near term, but I also think it's important not to have too firm statements on growth right now, because it is highly uncertain, and we still expect some growth in the New Zealand economy this year. Based on fundamentals and where the economy was heading before the conflict. And if it's resolved, I'm rather confident that we'll see actually some really good growth number out of New Zealand this year.
Governor, we really appreciate your time with us today. Governor Anna Breman there at the Reserve Bank of New Zealand, and fully appreciating the challenges of central banking decision-making in these uncertain times. More ahead on the Asia Trade. This is Bloomberg.
U.S. Vice President J.D. Vance is set to lead talks with Iran and Pakistan on Saturday morning local time. It comes as Tehran says the ceasefire has been violated after Israel continued its attacks on Hezbollah militia in Lebanon.
If Iran wants to let this negotiation fall apart in a conflict where they were getting hammered over Lebanon, which has nothing to do with them and which the United States never once said was part of the ceasefire, that's ultimately their choice.
Let's bring in our politics editor, Laura Davison. Laura, at this point, when we're not quite sure how the ceasefire is being worked out, what are we expecting to see from these negotiations?
It's clear that, just 24 hours or so into the announcement of the ceasefire, that the cracks are really already starting to form. The key points, one, that attacks would stop, that there would be a cessation of hostilities. That has not held up, with Israel continuing to bombard Lebanon, as well as Iran hitting some sites in Kuwait and elsewhere, whereas there's also not ships flowing through the Strait of Hormuz. So those key points, continue to be sort of what Vance and the Iranians will talk about going into these talks over the weekend. But there's a long laundry list of stuff beyond that. What does a peace look like after this 14-day period? Are they able to, get some sort of more comprehensive deal hammered out, or will they need to extend this 14-day period? Can they extend this 14-day period, or have tensions, ratcheted up too high just, with 24 hours of the ceasefire not really going as planned?
Even as this grips everyone's attention, we've seen President Trump sort of take a moment to go back to some of his bread and butter, which is criticizing NATO, right, as well as threatening tariffs on the likes of China and Russia because of the Iran weapons supply issue as well. This just continues to be something that the president hammers home on.
Yes, this has, been one of his, talking points, really going back to his first term, but really ratcheted up in his second term. Both, his grievances with Greenland. He feels that the U.S. should be able to buy Greenland or take Greenland, and NATO has pushed back hard on that. Mark Rutte, the Secretary General of NATO, was at the White House today, had about a 2-hour meeting with Trump to talk about the future of NATO, the U.S.'s involvement. And after that meeting, Trump put out a post on Truth Social, saying that, kind of really underscoring his discontent with NATO. The thing that the White House has to contend with is that to actually officially exit NATO, they need Congress. Trump cannot do that on their own.
Bloomberg's Washington Deputy Bureau Chief Laura Davidson there for us. More ahead on the Asia Trade. This is Bloomberg.
Take a look at some of the tech names across Asia. Given the outperformance that we saw in the Wall Street session, we had Max 7 gaining ground. We also had those AI demand trades, server demand trades really gaining ground, as you can see on the right side on the terminal screen. At the same time, do keep an eye on those software names. We saw software stocks being hit in the overnight session from a couple of launches from Anthropic and Meta as well. This is Bloomberg. Broad downside across equities in Asia after we saw the relief rally in the overnight Wall Street session. We're seeing that falter with oil prices gaining a little bit of ground. Of course, there's a lot of questions over what happens to that 2-week ceasefire. So you can see the Nikkei now falling after 4 sessions of gains, and the Kospi that has seen its best day since mid-March or so, also down about 0.4%. Ship owners also rushing to understand the fine print of that U.S.-Iran ceasefire that could temporarily unblock the Strait of Hormuz, but that would at least be in theory and perhaps provide an exit window for hundreds of vessels trapped in the Persian Gulf. Joining us now is Jennifer Parker, a young professor at the University of Western Australia's Defence and Security Institute. She previously served as a naval officer with experience in the Middle East. Jennifer, really good to have you with us. Of course, we're seeing conflicting rhetoric. We're still seeing some countries in the region under missile attacks. What is your understanding of what's happening in the Strait of Hormuz, and how long does it take for these vessels to actually feel safe to navigate the strait?
Well, thanks for having me on. Look, I think when it comes to the Strait of Hormuz, we've really not seen any movement since the ceasefire announced, and that's not surprising. So there's been a lot of focus on whether the Strait is open or closed. That's really the wrong way to look at it. The Strait was never blockaded. It was never closed. But what's happened is Iran has attacked about 29 vessels during the course of this conflict, civilian merchant shipping, which has deterred ships from wanting to transit through. Now, just because the ceasefire has been announced does not mean that ships feel safe to transit through. And so there needs to be a long phase of reassurance of making ships feel safe to go through. Now, what's probably complicated that further is the fact that it seems to be unclear what the exact terms of the ceasefire are when they apply to the Strait of Hormuz. The US has said that the Strait is open and it should be unimpeded travel. Iran has said that ships can go through with the permission of the Iranian armed forces and certain technical limitations need to be applied. And there is some evidence of Iranian Revolutionary Guard Navy in the Strait in the last 12 hours telling ships that they can't go through without approval. So that's not going to do much to reassure shipping that it's safe to go through. So until there is clarity on what the requirements are to transit that strait and shipping feels safe, you're not going to see significant numbers going through. We normally would get 138 going through a day, 20 to 30 tankers. Throughout the course of this war, there's been about 100 ships that have gone through in nearly 6 weeks, averaging 2 to 3 a day. I don't think that's going to change in the near future.
And the thing is that some vessels have gone through, as you said, but we don't necessarily understand the terms of the agreement that they've had with Iran. So if, in fact, Iran is trying to establish a systematic way of tolling the Strait, what are the implications for the global understanding that we've had for hundreds of years when it comes to the freedom of navigation in the world seas?
Yeah, look, they're pretty significant. And, one version of the 10-point plan that was pushed out on Iranian state media, now whether this is in fact what is being negotiated or not is unclear, did say that Iran would toll the Strait. Now, in terms of those 100 or so ships that have gone through during this conflict, it's important to note that most of those have been Iranian. So the US has chosen not to impede Iran's oil flow. So ships coming from Kharg Island inside the Strait, taking oil outside the Strait, across the Indian Ocean and to China. The US has not impeded that. So most of those ships have been Iranian. There have been a couple of others. There's at least evidence of 2 or 3 ships going up to the northern part of the Strait, close to Iran, around Larak Island, and potentially paying that toll. The implications would be huge. And I don't think the international community, nor the regional Gulf states, nor Oman, which is the southern coast of the Strait of Hormuz, is going to support Iran applying a toll to go through the Strait of Hormuz. The Strait of Hormuz is an international strait. Transit passage applies and ships have freedom of navigation. If we were to accept a change there, which I really don't think will be the future, but if, then states that sit astride key choke points, for example, Singapore, could choose to put tolls on the Strait of Malacca or other key straits. It would fundamentally impede the organising principle of the oceans, which is freedom of navigation. So I don't think this is going to be agreed in the long term, but in the short term, I don't think we're going to be seeing ships going through. And even if Iran says everybody can go through right now and pay a toll, I think you'll see a lot of owners of shipping say, no, we're not going to do that because that will set a dangerous precedent.
Jennifer, it doesn't sound like you're very optimistic when it comes to these ceasefire talks, if at the core of this is a fairly difficult resolve and messy scenario, regardless of how the Strait gets reopened or the conditions by which vessels are allowed to go through.
Well, look, I'm optimistic when it comes to the ceasefire in terms of, I think Iran and the US both think it is in their interest at this point to cease hostilities. Now, we have seen some breaches of the ceasefire. That is common with ceasefires, especially when a regime like the Iranian regime has been attacked. They may not have control over all of their military forces. So I think we will get to the point of the end of this conflict. But there is a difference between that and that translating to ships feeling safe to go through the Strait of Hormuz. Now, to feel safe to go through the Strait of Hormuz, you would need to see significant naval presence from the US Navy, I think, and other navies, an international coalition. You'd need to see clear information sharing with those ships, and you need to see a reduction in attacks from Iran. I don't think we're seeing any of that now, and there is a lack of clarity around what Iran thinks the conditions are for going through the Strait. Will shipping return to normal? Yes, it will eventually because of economic imperatives. But this is going to be a long journey and not something that happens overnight and not something that happens in response to a truth or a tweet.
How soon do you think we can be restored to full maritime certainty? And if that is more of a medium-term or long-term project, if you will, and if that is going to come with additional costs as well, tolls perhaps, are there alternatives that the world, that shippers should be looking at in a more sort of permanent basis rather than just temporary workarounds?
Yeah, look, there's not significant alternatives. When you look at the Strait of Hormuz, it is one of the world's true choke points. What that means is it is the only maritime avenue in and out of the Persian Gulf. So shipping returning to normal, look, I'm not going to put a time frame on it, but I think it is the medium to long term. And what is normal? Normal is 138 ships going through that strait a day, 20 to 30 oil tankers. Even at its peak in the last week, where we saw last Thursday 12 ships go through, that's not even 10% of the normal trade. There's no way to avoid that strait, though, so shippers will eventually have to become confident in going through. There's no way to really get oil out in significant numbers. I know that Saudi Arabia, of course, has a pipeline going down to the Red Sea, but in significant numbers, there's not a way to get oil out of that Persian Gulf or other elements. So it is going to have to return to normal, but that will be a long journey in making shipping comfortable to go through that. And even once that occurs, we also need to remember that there has been significant destruction to the energy infrastructure in the Gulf states. Now, how long that will take to repair and how long it will take to get up to normal oil production in those Gulf states, I think is also unclear. So we're not going to see this stabilise for a long time yet. I'm not going to put a week or 2 weeks or months on that, but it is ships need to feel comfortable in going through. And clearly the announcement of the ceasefire, the lack of clarity around Iran's position, we've seen not many ships move this morning, which means they are not comfortable in going through.
It would be a very bold move indeed to assign any kind of certainty, even at this point in the ceasefire, right? Jennifer, always great to have you with us. Jennifer Parker, who's the adjunct professor at the University of Western Australia. And to the point of that uncertainty, we are seeing some perhaps consolidation in the trading after what was really a phenomenal relief rally that we saw in the previous session. That lack of clarity when it comes to what happens to the Strait of Hormuz, this is what we're seeing. We're seeing, of course, that tick higher when it comes to oil again. FX is also on watch as we see the pullback in the US dollar as well. That haven demand is fading, but still a great deal of uncertainty, right? Dollar China looking a little bit flat at the moment, a bit more of a movement when it comes to trading in the yuan. Well, Bloomberg Rates Emerging Markets macro strategist Marcus Wong joins us now from Singapore. And Marcus, you know, as time goes on, we are learning a little bit more in terms of what the energy sort of choke point might continue to look like without a full reopening of the Strait of Hormuz. How does that potentially impact some of the assumptions that are underpinning the FX trades in the region at the moment, given the outsized negative impact that we've seen for Asian economies and currencies?
Yes, you know, I think that we saw this huge rally on Wednesday, obviously, as a result of the ceasefire between US and Iran. But, you know, as Jennifer Parker just spoke just now, you know, we are hardly out of the woods just yet. You know, the choke point is still there. And we just, you know, news just came in this morning, you know, that Tehran claimed that there was a break in the truce, and this is barely just around 24 hours just after a ceasefire has been announced. So even yesterday, as we spoke to a lot of market watchers out there, although there was a huge rally, and a lot of it is due to this really pent up, bearish sell-off prior to that. Investors, especially in Asia, are quite cautious moving forward. There is cautious optimism is the word. Oil prices have dipped, but they're still very, very quite elevated compared to where it was pre the war, and no one expects it to revert back soon in a sense. So of course on Wednesday we saw a huge rally in the net oil importers such as the baht, the yuan, and what's likely going to happen going forward is, currencies are going to continue to trade based on the headlines. There is a 2-week ceasefire, but as we've seen, these things can change overnight. So no one is going all bullish, quite bullish on Asian assets just yet, but probably tipping their toes in at this point.
Yeah, trading on headlines, but perhaps also some central bank action as well. What are we seeing in terms of intervention from authorities to try to really prop up their currencies amid all of this geopolitical uncertainty?
Yeah, so again, yesterday's rally, Wednesday's rally definitely gave some central banks reprieve. I mean, we saw quite a few currencies such as the rupiah, the Philippine peso, all fall to record lows since the start of the Iran war. But that said, even if you look at data coming in, like Bank Indonesia actually released its reserves data this week, reserves actually fell to a 2-year low because obviously, a lot of was used to defend the rupiah. I mean, I'm not suggesting that, the levels foreign reserve levels are of concern just yet, but it shows that the magnitude that central banks have had to step in to defend their currencies. Even the RBI decision yesterday, the governor was at pains to emphasize that, the intervention that they took, including the 100 billion cap on the onshore forward positions, is temporary, and that they are aware that there are dislocations in the market as a result of intervention. So short and long of it, we are hardly off the woods just yet, as I mentioned, and we would expect central banks to continue to step in to defend their currencies as needed. Asian central banks came into this war with quite robust reserves. I mean, import to cover ratios were quite decent across the board. So I guess there's no sense that there's a systemic crisis at this point in time. So yeah, we just have to see how long this drags on.
Yeah, we're seeing a little bit of downside early in the Asia session for Asian currencies at the moment. Marcus Wong, good to have you with us in Singapore, Bloomberg Rates Emerging Markets macro strategist. We have more ahead. This is Bloomberg. Take a look at how Japanese assets are trading early in the Asia session. We're seeing a little bit of a reversal after 4 sessions of gains for Japanese equities. We're down 0.4%. Of course, we have seen a little bit more stability on the Japanese yen, strengthening after the U.S. dollar wiped out its gains for the year. We're seeing a little bit of weakness today, a little bit of a reversal given the uncertainty over the 2-week ceasefire between the U.S. and Iran. Even oil prices rallying a little bit early in the Asia session. But of course, here in Japan, it's all to do with the earnings season, and we'll be watching Fast Retailing and 7 & I today. Both companies set to report earnings. You're seeing some upside before those results, which could be a mixed bag. Of course, we have the uncertainty from the Middle East conflict as well. Our senior editor, Reed Stevenson, joins us now with the latest. Should we get started with Fast Retailing? Of course, especially what's happening with domestic demand. We have seen the trickle of Chinese tourists given tensions. A lot happening.
Yeah, there's a lot of moving parts for Fast Retailing. We're coming into a situation where there's fewer tourists in Japan, but also, there's supply chain issues and then demand issues. They also have ambitious growth targets in the U.S. But overall, they've surprised on the upside. So I think we're going to see, some solid performance and them on track to at least show, pockets of growth across all of their markets. The key thing to watch probably is their outlook, their operating profit outlook for the current fiscal year, which ends in August. That's really going to give you a sense of, how the company is looking at the shape of demand and also potentially supply chain issues, given that a lot of their fabrics are, in fact, synthetics that are derived from petroleum.
I have many friends coming from the U.S. and they want to go to Uniqlo because, of course, of the cheaper yen and differentials. But you said it. I mean, it's that growth ambition around the world as well, right? Yeah. What can we expect?
Yeah, well, in China, they had a bit of a rough patch over the past, 18 months or so. But the numbers ever since last quarter seem to indicate that they've, started to bounce back in China. Japan's always been, their mainstay, strong market. And then really the question is, can they sustain, double-digit growth in places like Europe and the U.S., where, they are starting from a relatively smaller base when compared to their sort of outsized presence in Asia.
Yeah, and perhaps a similar story for Seven & I, where weakness could be expected more overseas than here in Japan?
Yeah, Seven & I is facing a couple headwinds here in Japan. The convenience store business hasn't just been as robust as it used to be, partly because of, issues around inflation and wage growth. The U.S. is an entirely different matter. CEO Stephen Dacus is essentially trying to stage a bit of a culture change and turnaround in the U.S. operations. Of course, the other headwind there is rising fuel prices. A lot of 7-Elevens in the U.S. are actually gas stations, and if people aren't going to go fill up as much, they're not going to spend as much in the convenience stores. And all of this really is a looming cloud over their planned IPO of the U.S. business later this year. That's really going to be the main focus for earnings today, I think.
Reed Stevenson, really good to get your insights. Of course, we do have Fast Retail and Seven & I, as he mentioned, senior editor here in Tokyo, with a preview of what to expect out of the results. And just as Reed mentioned, of course, supply chain issues are one thing that we'll be watching with the geopolitics ongoing around Iran. We're keeping an eye also on Hyundai, CEO and president of the company, saying that they're rerouting ships around Africa to avoid the Strait of Hormuz, slowing the automaker's global supply lines. It comes as the company navigates a volatile car market in the U.S. Speaking exclusively with Bloomberg, Jose Munoz says the company is also working to invest billions in its American production.
We have made a big commitment to invest $26 billion in the next 4 years. And this is after $20.4 billion that we have invested in the last 40 years that we've been in the country that we celebrated last year. As part of this commitment, we want to increase our capacity in the U.S. to 1.2 million from 800 to 900,000 today. And then we want to increase our supply chain, including a steel mill in Louisiana, and then additional investments in technology like robotics, AI, data centers, so on and so forth. But the most important that we have announced during the New York show last week is that we're going to introduce in the market 58 new products. 36 are going to be Hyundai products, and 22 they're going to be Genesis. And then through the next 4 years. And then the most important for us was the introduction of the Boulder concept. Because when you look at the behavior and the performance of the brand in America, I think we do pretty much a good job. So we just ended Q1 with an all-time record. We had the 2025 overachieving 1 million wholesales for the first time ever. And we're thinking how we can continue to grow and link this to our commitment to America for America. And we thought that the only segments where we are not competing today are the body on frame. We got a fantastic review by the press, so thank you, Matt. Everybody loved the designs. I can tell you that the reality is going to be better than that.
Yep.
Our designers never disappoint us.
I will tell viewers who don't know, body on frame means it's a much more robust vehicle. That's a truck, right? As opposed to the unibody cars. And you need that in this region because of all the potholes and broken down roads that take a beating. But it's one that has long been dominated by U.S. players because of this tax. We have a 25% tariff on light-duty trucks built overseas that come in here. Where would you build such a body-on-frame vehicle?
Definitely here in America. This will be part of our strategy to be localized, to be vertically integrated, part of the $26 billion. So we want to make it here with our supplier base and then to the taste of the American consumer.
Hyundai's president and CEO Jose Munoz there speaking exclusively with Bloomberg. More ahead here on the Asia Trade. This is Bloomberg. The top corporate headlines that we're tracking, and an easing of hostilities in the Middle East may create conditions that bolster private equity deal-making through the rest of the year. That's according to Blackstone's global head of private equity strategy, Joe Barato, who spoke exclusively with Bloomberg's Danny Berger.
You had a major global conflict. geopolitical situation, which hopefully is resolved. None of that is a great recipe for lots of deal doing. That being said, I think we will see a resumption in deal activity. And this year will be, for the rest of the year, I think it will look like a normal year of private equity.
Delta Airlines is expecting to incur more than $2 billion in higher fuel costs through June amid the Middle East conflict. Airlines are now weighing just how much of these added costs can be passed on to passengers without hurting demand. Delta says bookings remain strong in premium, corporate and peak summer travel, but is seeing pockets of weakness in demand in Europe and Mexico.
We see actually really good demand right now across all entities. We're going into peak summer for transatlantic, and that looks very good right now. Transatlantic was a bright spot for the first quarter. So no, across all the booking curves and across all the booking periods, we're seeing strong demand.
Take a look at some of the Asian software stocks. We had seen the downside in the overnight session after Meta unveiled a new AI model, and also Anthropic launching Claude tools for building agents. And here across Asia, we're seeing the likes of Australia's WiseTech falling more than 8%. We have seen the downside already in the overnight session, as I mentioned, with the S&P 500 software index down almost 2%. We will be watching those stocks also across the Taiwan market opens, the China market opens as well. We had seen significant foreign inflows into some of those economies, especially South Korea, for example, some downside today, but we had seen overseas investors buying a net $1 billion of Kospi stocks on Wednesday. And even in Taiwan, foreign investors buying the most stocks since 2005. So do watch out for the market opens there. That's it from the Asia Trade. Our markets coverage continues. The China show is next. This is Bloomberg.